Welcome to Loopholes and Lawsuits. I'm Jamie Schrabeck.
And I'm Mike Vo. Jamie, I have to say it again, but
No!
I enjoy our time together.
Oh, good. I'm relieved to hear you say that, Mike. I do enjoy our time together, and I will say this: we do not get it often enough, and it's because we have been working on our own projects. And we are committed to this project. We just need to find a rhythm that makes it make sense for the future.
Right? It's hard. We both have daytime jobs. So we do this voluntarily, folks. We're not getting paid. There are no sponsorships. This is just raw, free, good advice that we give our viewers every episode. We try to make it relevant. We don't want to just have episodes and take up your time. We always are making sure that we have good information to share every time. And, I'm excited about what we're going to discuss today. I know we're going into the holiday season. Q4 is upon us. So a lot of good things. But so that I don't forget, though, I'm going to read our disclaimer. The information and advice provided today is not intended to be taken as and should not be construed as legal advice. No attorney-client relationship is formed through any of the discussions on today's podcast. You must consult your own private attorney for issues that are specific to your situation. Further, all topics of discussion are based on the law in effect at the time of taping. Please make sure to check for later podcasts of loopholes and lawsuits for any changes in the law. With that said, Jamie, there's always so much going on, but it's exciting with the holidays coming up for the salons.
If nothing else, just to put the year behind us. That's how I think of it sometimes. I always think of the new year as a fresh start.
Mm-hmm.
My clients, most of them, have standing appointments that I reserve for them. In fact, I just sent out the email with their appointments for all of 2026.
Oh, nice.
And not to say that every hour of my day is already reserved, but a large percentage, more than 50% of my available hours for next year are spoken for. And that's why when we approach the holiday season, I don't worry so much about trying to fit in new clients because my time is fairly taken already.
Excellent. I love the way you're calendaring, you're planning, what it looks like going into Q4 of the year, which a lot of folks don't plan for properly. That's great. So as I was sharing with you, I got back from trial and slammed with my usual law office work that was building up in my absence. And I picked up two new cases. One where a client had a restraining order against her, a civil restraining order, where the plaintiff claimed that the defendant hijacked the restaurant. And so the plaintiff ended up getting a restraining order while my client was on vacation. I have to oppose the preliminary injunction, then file my own restraining order to get the restaurant back because we discovered during the time that we were preparing the opposition to the preliminary injunction that the plaintiff had fabricated and submitted false government documents to the court for consideration.
Oh my.
These false documents essentially state that the plaintiff was at least a CEO, CFO, a secretary. We typically see in the statement of information that you file with the Secretary of State. It doesn't necessarily show proof of ownership, but it's one basis of consideration for a court when looking at, well, in a small family business, if you're the CEO, CFO, and secretary, pretty good likelihood you're probably also the owner. You're not just an officer, but you're the owner. So the plaintiff in my situation fabricated these records, gave it to the judge, and argued, look, I'm the owner. I mean, it's a small family business. Who else would be the owner if I'm the CEO, CFO, secretary? Judge bought it, hook, line, and sinker. We're going to our own restraining between family members, let's put it that way.
What lawyer submits false documents to the court?
I like to think that most lawyers, we want to vet our clients. Anytime a client comes to me and asks me, or tells me their story, right? I said, great, you told me a good story, but I don't know you from Adam. What evidence do you have to convince me that you're telling the truth? I'll ask for emails, texts, tax returns, whatever I can get a hold of. My guess is that in this case, the plaintiff's attorney didn't fully vet the case. Probably caught off guard trying to explain to the judge, because I'm sure the judge is going to have a few choice words at the hearing. Like, why did you not vet these documents? And, I relied upon these in issuing a restraining order, which is an extraordinary relief. Most judges are very reluctant to issue restraining orders. They tell a litigant, just duke it out. And at the end, if a jury finds in favor of one side versus the other, then the remedy is monetary damages. But for the court to come in and give possession to another party pending a litigated dispute, that's extraordinary, which I haven't seen in a long, long time.
Well, it just goes to show that status as an attorney is dependent on your credibility with the court.
It does. It does. In this case, it was a situation involving a restaurant, But a lot of times, Jamie, what you and I talk about, I wouldn't be surprised if that occurred in a salon setting as well. Between partners, former owners, current owners, or tenants, where someone's saying, that's my salon, right? And then it's like, okay, where are all the records? Who incorporated? Who are the officers? Who has stock certificates? Who paid for stocks and shares in the company? Just because you have a piece of paper saying you own 10,000 shares of a company, how'd you get those 10,000 shares? Did you just print it off the internet, or did you actually pay for those? And the monies went into the bank account of the salon and it was used to fund the build out or operations. These are issues that I can see where there are multiple members, and if they're not family, even more so, where someone's claiming ownership.
Mike, as we enter the last quarter of the year, most people are focused on the holidays and trying to get as many clients as possible before year's end. But I would like to spend the time that we have today discussing what kinds of things should we be doing at the end of the year to best prepare for the beginning of the next year. These issues you're bringing up now around ownership and responsibility, I can't help but think about the liability, particularly the tax liability that will obviously come, and we should have already been paying our quarterlies all year long. So many people are focused on trying to get as many clients in as possible, but there's so many things that we could be doing just to make sure our own business is in order first.
Right. If you're a corporation or a limited liability company, or even if you're a sole proprietor, I would recommend take this time to do an annual financial checkup, like a health checkup. If you've already done your taxes, what can we do in preparation for next year's taxes to reduce taxable earnings? Do you have any build out, any remodeling work that you're going to have to consider? Another thing they should be considering is, what are the labor laws for next year? I know this past year, and we were having a lot of confusion over what's the status of manicurists. Are they employees? Are they independent contractors? All of our viewers should know going into 2026, what does that situation look like? Other things, if you are part of a corporation or limited liability company with shareholders, LLC members, other investors, other partners, whether it be family and friends or just investors who jumped in, I would recommend that now's the time to at least meet and discuss, how did we do this past year? Presumably you finished your tax filings, you know how well you did or how bad you did. You want to talk to your partners. What can we do better next year to get us on track for growth and strong revenues? Right now, there are some other considerations that are out there in terms of the economy. Not getting into the politics, but the economy is a little softer. Folks are a little more concerned about their job security. Folks are concerned about extra discretionary spending. An individual may not go into a salon for that manicure, the pedicure, the haircut, whatever it happens to be. They're going to be a little more cautious in their discretionary spending. So I think those are considerations that all salon owners should start looking at. I know we're excited about the holidays. This is when typically revenue is going to increase substantially, and it's probably a big portion of any salon's annual revenue. But maybe I'll let you speak to that. You're actually in the salon setting. Kind of what's the difference going to the next 3 months, Q4 versus what you normally see in Q1 through 3?
Because most of my clients are standing appointments, there's that consistency throughout the year. What I experience during the holiday season is a loss of time on the schedule. For example, the fact that I work Tuesday, Wednesday, Thursday, with Thanksgiving landing on Thursdays always, obviously, I lose that day. And so I have to make time for them somewhere else on the schedule without trying to add days is my goal. Doesn't always work out that way. But I do have an increase in potential clients trying to contact the salon to get on the schedule, but I don't make time for them because I try to protect my mental health, and clients I have who are already on the schedule are my main priority. I'm not trying to sell gift cards either. You need to understand what the gift card rules are in your state before you just start collecting money thinking, well, they may or may not ever show up to redeem those gift cards.
Right. And it becomes a headache if you're looking to sell the salon. I routinely get into issues where clients who are either buying or selling a salon have to handle the accounting of gift cards. So just something to consider if you're one of our viewers who does opt to offer gift cards or accept gift cards. How do we handle that from an accounting perspective? Some of the other issues, just going into the holiday season, it's going to get crowded. There's just more people, more bodies going to the salon. So to avoid any unnecessary risk, mitigate any risk, make sure that you're keeping the salon nice and tidy. You want to avoid what maybe seem obvious, but the usual slip and fall. Right? There's a lot of products that are being used in salon. There are folks that are walking from the stations to the sink to the restroom. We want to make sure that we're doing everything that we can to avoid injury, not only to our staff, but to our customers. This time of year, because it tends to get busier, you're trying to get in as many customers as you can during a shift. That doesn't mean that you get to disregard labor and employment laws. A shift still requires there be meal breaks, rest breaks. They're entitled to all that. So you cannot just jam a person for 8-10 hours a day without providing those mandatory breaks. Be mindful of time management. But if you are in one of those salons where it is just bursting at the seams and it's the holidays, maybe you want to talk to your workers about paying out missed meal breaks and missed rest breaks and having them take those breaks when appropriate based upon the customer needs. That might be one way to do it. If you're looking at hiring for the holiday season, got to think ahead. Do you have the cash flow? You have the revenue. It's not work, work, work. I'll pay you after the holidays. That's not the way it works.
Depending on what day you're working, there's issues of holiday pay. And of course, the overtime pay would be a factor regardless. And getting back to your point about paying out meal breaks or rest breaks that aren't being taken, I used to do that with my employees with their lunch break, but knowing that their lunch break would have only been a half hour, but California law required that I pay them for an entire hour at regular rate of pay.
Right.
So it's not that you could just have a conversation with your employees and decide on a number. It's dictated by law what you would have to pay if they miss those breaks.
Right. Yeah. So there's a lot of compliance issues that go into paying out those meal and rest breaks. Look into those laws. Every city and county, at least here in California, seems to have a different hourly rate. So if you're close to hourly for any of your workers, or if you are a worker, make sure that your hourly is compliant with whatever your jurisdiction requires.
When you were talking about talking to your partners, if you're in a partnership or if you're a corporation, your shareholders, your officers, just because you're in that kind of arrangement now doesn't necessarily mean that that serves you well moving forward. Can you talk a little bit about, yes, you got into that arrangement, but what is it like if you decide that that's not going to be the thing that helps you survive financially in the future?
Well, the tax implications, depending on what your structure is. I'm not a tax attorney, so I don't give tax advice. But there are tax implications as to how you're preparing and paying your taxes, whether you're a corporation, a C corporation, an S corporation, or if you're a limited liability company, there's a partnership, or if you're just a sole individual. If you're a sole member LLC, then you're treated as an individual on your tax status. There's not a separate tax situation. So talk to your accountant, tax preparer, whoever it happens to be, to figure out the best situation for you. Now, there's an inherent tension between what tax advisors give and what attorneys give, what kind of advice we give. I'm not looking at the best tax benefits. I'm looking at it from more a liability standpoint. What do we need to do to protect the corporation, the individual shareholders or partners? If you're looking to separate, someone's looking to retire, someone's moving out of the state and they want to sell their shares or their interests in the salon, what's the proper way of doing it? Sometimes there's bylaws that restrict who can own shares in the company. There's a right of first refusal. We want to look into those things. Maybe you're looking to sell your salon. Next year, you're like, I'm done. I've had it with this state. We have to look at the lease situation. Who's on the hook for the lease? Well, you could close down, but you're still on the hook for the lease. But if you happen to sell it to a buyer, what does the lease require for a new buyer to take possession and legal tenancy of that space?
Let's explore that a little bit more because I have seen a number of posts recently about that where individuals, owners, feel that their best move financially is to sell their salon. Some of them are planning on downsizing and others just want out of the industry altogether. What is it that they're actually selling?
Two things you can sell. You can either sell the assets, the tables, the chairs, the decorations, the supplies, what we call the assets of the salon. If you are a corporation or an LLC, you can sell the interest. So the shares, the stocks, if you're a corporation, the LLC membership can be sold. So it depends on how you want to structure that transaction. More often than not, the way I see it is that my clients who are selling or clients who are buying, they're looking at just buying or selling the assets of the salon. Tables, chairs, products, customer list, goodwill, website, all the social media handles. So they're buying all that, and they also have to make sure that they obtain an assignment of lease or transfer of lease or get a new lease for that space. And the reason why is the buyers typically don't want to absorb or assume the liabilities of the seller if it were a stock transaction. So if you're selling the company in terms of the shares of the company, well, the seller is going to transfer all the assets and the liabilities to the buyer, which means the buyer is going to accept the liabilities as well. The issue there is a lot of buyers don't want to buy into any employment liabilities, payroll liabilities. So a lot of times if you're buying a salon and I don't know, a year later you have an employee saying, hey, you owe me this. And there's issues with that. Payroll taxes weren't withheld properly. You could have a situation with unpaid compensation going back a couple of years. You don't want to buy into that. We either sell the assets or buy the assets. As part of any asset purchase agreement, there's an express clause that the buyer is not assuming any liabilities before the date of the close of escrow. So anything after escrow is when they take over and incur their own liability.
Okay, to clarify, assets can be physical assets or they could be intellectual property,
Correct.
trade secrets.
Trade secrets, customer lists, the name of the salon. If you have a very well-known salon name, goes with it. A telephone number, social media handles. They're becoming very difficult to get nowadays. Websites, all that will come over.
And the liabilities that would be excluded would be responsibility for any kind of employment issues or any other of a legal or financial nature with the IRS or anybody, really.
Correct. Most of the time, it's going to be of a financial nature, right? You don't want to be on the hook for unpaid wages, unpaid payroll taxes. In terms of legal liability, it could be, but most of the time, if you're contemplating a purchase, the seller has to disclose all pending lawsuits. So if there's a pending lawsuit against a salon, someone got hurt during a manicure or pedicure, that has to be disclosed. And so as part of an asset sale, you would exclude that as part of the sale. So the seller continues to hold liability for that lawsuit, not the buyer. The buyer's not accountable for that lawsuit.
Included in the liabilities would also be those gift cards.
Right. Gift cards would also be another consideration. Let's put it this way. If I'm a buyer, anything that could come back and haunt me, I don't want it. I don't want it. I want it expressly stated in the asset purchase agreement. I am not taking liability for this, this, and this. You really want to sit down and talk to the seller. What do we have out there that could give me a headache or haunt me later on? You want to ask that question. Here's the reason why. Let's say the seller was being intentionally deceptive. Maybe they were overstating the revenues. They were overstating the customer list. They failed to disclose a pending workers' comp claim. They failed to disclose a pending customer lawsuit for injuries. You want to get it in your asset purchase agreement that these are all, the seller represents a warrants. These are all the known liabilities of the salon. Close escrow, you take possession. A month later, you're getting all these letters from the EDD, from plaintiff's counsel. What is all this? You then have recourse against the seller for intentional misrepresentation because you asked, what are all the liabilities I should know about? You want that representation from the seller. These are all the known liabilities. I don't know of any other liabilities. That's how you protect yourself. You may still be trying to figure out, okay, what do I do with this lawsuit that just came in a month after I took ownership of the salon? But at least now you have some type of recourse against the seller for failing to disclose it if he or she should have known or did know about it.
This is not the kind of transaction you do on your own. I would imagine that a legal counsel would always be advised.
I highly, highly recommend it because here's what typically happens. When they come to me after the fact, I'm looking at that agreement. So who drafted this? I just put a couple of bullet points together. Okay, that's why. Or I just grabbed it from Google or the internet. Okay, so no one walked you through it. You don't know what you really signed off other than saying, I'm buying the client list, the salon space, the tables and chairs. But all these issues that you're coming to me for, you weren't aware of because you relied upon your own knowledge and experience or you relied upon the internet, but you didn't ask the right question. That gets expensive. So you spent, let's say hypothetically, you spent $250,000 to buy a salon. You spent 10 minutes on the internet scouring for an asset purchase agreement. Now you're coming to me and there's a lawsuit. And I say, okay, well, to defend this lawsuit, this labor lawsuit that you have against you, it'll be about $250,000, $300,000. Wait a minute, Mike, I only bought it for $250,000. No, I'm not saying how much you bought it for. I'm just saying what it's going to cost you to pay me.
And they could have made that investment up front by just engaging with an attorney to review it and draft it or whatever it was that needed to be done to be represented by someone who's a legal professional.
Right. Right. And, we're talking about big agreements, big contract. Not that an employment agreement is a small agreement, but if you're going to invest $250,000 to a salon or you're going to sell a salon for $250,000, why not spend a couple of hundred, a couple thousand, whatever it's going to cost you to have it done properly. Because here's the other way I look at it. Let's say something goes wrong with that transaction, other than suing the other side, the buyer or the seller, whichever the case may be. If you had an attorney look at it, the attorney reviewed it incorrectly. Guess who else is on the hook? Your attorney. We joke about this. I know you and I, Jamie, we joke about it. You can't sue AI. It just doesn't work. You can't sue Chat GPT. You can't sue the internet saying, oh, they didn't have that on the form. You need to be able to sue somebody for recourse. If it's going to be the other party or your attorney, you want to have that recourse.
I'm just going to go back to the fact that you said haunted and we're in October. I love that.
It is very timely. I don't want my clients to be haunted come November when they realize, oh, that was a tough month.
We don't want to be haunted by our past decisions. That is for sure. Mike, the other thought I had about the end of year and preparing for the next year, I think a lot of times we sort of get ahead of ourselves and we tell ourselves, certainly things will be better, things will settle down. I think that's not quite the assumption we should be making in this uncertain economic environment, that somehow things will magically get better without taking action.
Right. Well, preparation. I think the most important thing is to prepare, not hope. Yes, you do want to pray, but praying and taking no action is not going to work either. You got to prepare. You got to sit down with your business partners or yourself, if you're the only owner, and look at what's it going to take for me to not only survive next year, but to thrive next year. I think that's the hard part. A lot of us entrepreneurs, business owners get caught in the business, the daily management, doing the manicure, doing the pedicures, opening the salon, whatever it is. We're actually in the business as opposed to being on top of the business. And to be on top of the business, take a step away from the salon, look at the financials, look at what's going on. That's the most important part of the planning process, is step away. Don't just think that I can continue to grind it out. The grinding it out is not the planning at all.
No, it's not. It's action, but it's not the action that's going to make any improvement. We are surrounded by this hustle culture that tells you that if you're not surviving, then you're just not trying hard enough. That's very unfortunate because there's only so much you can do. Doing the wrong things, I mean, you could, I guess, apply yourself to do more of those, but that's not the direction you need to be taking. And I think that step back requires what we've always encouraged people to do, which is to get perspective and do research. What is it that I'm doing that isn't best practice? First of all, we should be compliant, right? So assuming that you're compliant, there are other things that you could be doing that would be better practice to improve your business.
There's a lot to learn. Is learning to be the business owner. The regulatory issues, compliance issues, dealing with contracts, making sure the customers aren't getting injured, how you market. Sometimes we don't think about it, but your marketing could lead you into issues and problems as well. Making false representations. I've seen it. Here's an interesting thing. I don't know how many salon owners have been affected by this. There's a law about making sure your website is accessible. I've had clients across industries get sued for having an inaccessible website for those who have some type of disability or impaired. And I have clients who say, wait, I'm a closed door business. We don't even have people walk in. We're not a retail business. So why would I get sued? I say, well, unfortunately, the way the law is written, it doesn't distinguish between a closed door business and one where retail environment where someone walks in. It just says it has to be accessible for those with certain disabilities. So if you're in a salon and you have a website, make sure your website is ADA compliant. Most of those lawsuits, to settle them out, just to settle them out, not my fees, just to settle them out, are between $25,000 and $50,000.
What I don't think a lot of people realize in our industry is that that person who sues you doesn't have to be a client.
Right.
They could be someone who's looking for, if they were in the real world, they'd be looking for a business location where there wasn't a ramp or an elevator or whatever the case may be that would be accessible to someone with a physical handicap. But obviously the internet makes it that much easier for people to find websites that are not accessible.
I'm willing to bet many salon websites are not accessible. If you're one of those that has a little technology experience, get the module for that. If you have zero website experience, talk to your web designer and install that module. It's a couple hundred, a couple thousand, but better than paying $25,000 just to get rid of the lawsuit. They're very hard to defend. I tell clients, just give me authority to sell it. They're very hard to defend because the attorney's fees are astronomical and disproportionate to what it would cost to just settle it.
Wise word.
Sometimes I may sound like a broken record. Like Jamie and Mike are always worried about this and this. Well, that's what we want to share with our viewers. We weren't sharing these things. You're not getting the information you need. I'll be candid. If you're not getting this type of information, you're in the wrong conventions, the wrong platforms. We're not here to feed you and make you always feel good. We want to do that, but we want to make sure that you are doing everything right to be running a compliant salon, which would ultimately lead to profitable salon.
It's timely that we're talking about the accessibility because I would imagine that during the holidays, there is an increase of traffic to your website.
Yes, you're definitely right in that point. And where the lawsuits come is not October, November, December. It's going to be next year when there's a lawsuit that's been filed, and the allegation is that during the holiday season, I wanted to go to somebody's salon. I went onto the website trying to figure out where it was or what kind of services they offer. I couldn't read it. I couldn't access it because of my disability. I'm suing. You will see those lawsuits in the first half of next year.
That's the holiday spirit, Mike. Filing a lawsuit.
I may sound like Scrooge.
No, I think what you're saying is that salons get busier during the holidays, but lawyers get busier after the holidays.
That is correct, because that's when we find out something was wrong. So, folks, if you're listening, go back through our various episodes where we're talking about how to make sure you're not getting sued, how to stay compliant, because these next 3 months are when a lot of liabilities are exposed and incurred, actually.
Mike, I know you and I have discussed doing more events, live events,
Yes.
where we can interact with our audience and provide them with additional content that's tailored to their specific needs. We could do that in the form of classes at trade shows. We could do that in the form of a webinar. There are many different ways that we could accomplish this. So stay tuned. Mike and I are making plans for 2026. We are reflecting on this last year, which has gone by really fast.
When you put it in that context, things have really flown by.
Mike, as always, it's a pleasure to see your smiling face and to have these conversations with you because I feel smarter after we're done.
It is always my pleasure. I enjoy catching up with you and seeing what kind of issues are affecting the industry and what I'm hearing or doing since the last time we met. It's fun because I know that education is important. It's important, and what we do is invaluable. It's free.
Who doesn't like free?
Yep, especially nowadays when attorneys cost a couple $100 an hour. It's good to get some practice pointers.
Thank you, Mike.
Thank you, Jamie. Look forward to working with you next time.